So you want to get the lowest possible rate on a home loan, but how do you do it? I'm a mortgage broker with over 20 years of experience, and in this video, I'm going to break down exactly what you need to do to set yourself up to get the lowest interest rate on a home loan. Now, before I dive in, make sure, as always, like, comment, and subscribe so you get more content like this. Now, first things first, if you want the best rate, you're going to want to have a 780 or higher middle FICO score. Now keep in mind, with mortgage lenders, they're gonna pull what's called a tri-merge credit report. That means that they're gonna get a credit score and history from Equifax, TransUnion, and Experian, and they're gonna use the middle of those three scores as the qualifying credit score. So for example, if you had a 750 Equifax, a 759 TransUnion, and a 800 Experian, well, that 759, that's the credit score that's gonna be used for qualifying for your loan. It's gonna dictate what interest rate that you get. And so if you have a 780 or higher, then you're not gonna have any additional fees assessed for your down payment or loan scenario. Now let's talk about down payment, because that as well is gonna play a role in you getting the lowest possible interest rate on a home loan. When it comes to down payment, that's usually the greatest hurdle for most people when they're trying to get the lowest possible rate. Houses are expensive, right? And coming up with this amount of money is not feasible for everybody, so no big deal. But if you do have 25% down or more, you're gonna get the best possible interest rate as far as down payment is concerned. And the closer that you get to basically no money down, the higher the rate's gonna end up being. A lot of times buyers are utilizing a home equity line of credit or a second mortgage to basically bridge the gap in their down payment when they're buying a house or sometimes even refinancing. And we call that subordinate financing because it's going to take a subordinate position to your first mortgage. Well, when you have subordinate financing, you're gonna pay a higher interest rate. And depending on how close you are to no money down, the higher the fees are, the higher the rate will be for that loan. So if you can avoid subordinate financing, that's gonna help you get the lowest possible rate. Now, when it comes to home loans, there's a lot of different options. There's Fannie Mae, Freddie Mac, which is kind of the same thing, guys. You got jumbo loans, FHA loans, USDA, VA, non-QM. There's all sorts of loan products out there. If you want the lowest possible rate, unless you're a veteran, which most people aren't veterans, so I'm talking to the majority here. If you want the lowest possible rate, you're gonna do a Fannie Mae or Freddie Mac loan. But it doesn't just stop there. You're going to do a loan for the conforming loan amount or less, which in the United States, the conforming loan limit is $726,200. So if you're in a high cost area like Sacramento or Los Angeles or Seattle, or pick a high cost area, those loan limits are higher than $726,200. But guess what? That's called a high balance conventional loan. And when you are a high balance, guess what? There's a fee for being high balance because it's more risk. More risk, higher interest rate. So if you want the lowest possible interest rate on a home loan, you're gonna wanna stick with the conforming loan amount or less. Now, another area with home loans where there's a lot of options is the term of your home loan, meaning, do you do 30 years? Do you do 20 years? And in fact, you can select a loan term anywhere between 8 and 30 years and be a Fannie Mae, Freddie Mac loan. Now, the shorter you go, typically you get a better deal. You're gonna have a higher interest rate on a 30-year versus a 15-year. And depending on the market, right now is not the market because investors don't have an appetite for them, but sometimes you get a little bit better deal for doing a 10-year term. But right now, the best bang for your buck, if you want the lowest possible interest rate, is to do a 15-year term. Now you gotta remember that the shorter your term, the higher your monthly payment is. And even though you are gonna get a slightly lower interest rate, usually like a quarter point, maybe up to like half a point lower for doing a 15 versus a 30-year, you only got 15 years to pay the money back versus 30 years. And so the monthly payment is going to be significantly higher on a 15-year versus a 30-year loan, even though the rate is less. Now, when looking for the lowest interest rate possible, something else that you need to do is shop around. What do I mean by that? don't just go online and take the rate from the first person you talk to. You need to get multiple quotes so that you know that you've shopped around and that the interest rates that are being offered to you are the lowest for what you qualify for. Now, I recommend that you also, when shopping around, shop with a mortgage broker. In fact, mortgage brokers on average save their clients over $9,200 over the life of their loan. Mortgage brokers, like New Way Mortgage, have access to over 100 different lenders, and so they shop the market for your best possible options. And because of our business model, you're gonna get a better rate than what you would get if you go to a direct lender or a retail, bank, FDIC, whatever. So do yourself a favor, when looking for the lowest possible rate, look for a mortgage broker. Now, if you'd like to get a quote from our team, you can go to newwayquote.com, fill out a little bit of information. We're not gonna pull your credit. We can tell you exactly what rate you would qualify for your scenario, and that'll help you in your process for shopping around. As always, you can call, text, email, whatever works for you. And if you haven't already, do me a huge favor, tap that like button, make sure to leave your comments below, hit the subscribe, and we'll see you on the next one.